Welcome friends, this is Ramkumar coming out with the 27th episode of my Educative series. This episode will talk about the summarization of the prospectus of the IPO that is going to be launched by TSC India Limited. This IPO is open from 23rd July 2025 to 25th July 2025. The RTA for this company for this IPO is Big Share Services Private Limited. Disclaimer: I am currently not registered with any regulator in India like say RBI, SEBI, IRDA, etc. Rest of the disclaimer you may read at leisure on the screen in front of you. Now more about the issue details. As we mentioned, this IPO is open from 23rd July to 25th July 2025. The anchor investor is to apply for the shares on 22nd of July 2025. The basis of allocation will be finalized on or before 27th July 2025, while the credit of shares in the demat account of the successful allottees will be on 28th July 2025 or before. The trading date would be on or before 29th July 2025. But the issue size is 36,98,000 shares of rupees 10 each, out of which 1,86,000 shares are reserved for the market maker. That effectively leaves the investors with 35,12,000 shares in this IPO. The minimum lot for allotment is 2,000 shares, while for application it is 4,000 shares. The minimum application amount would therefore be 2,72,000, calculated at the lower cost or lower price of the book building price, which is from 68 rupees to 70 rupees. 70. There is no employee reservation for this IPO. Now we'll talk about a brief of the company. The company is having its registered office in Jalandhar, that is in Punjab. The corporate office is also in the same location in Jalandhar in Punjab. The BRLM, that is Book Running Lead Manager, is Export Global Consultants Private Limited. This company was founded in 2003. They are in the business of travel management. This is a fresh issue of IPO, that is 100% IPO. There is no OFS or offer for sale involved in this IPO. The proceeds would be going towards working capital as well as general purpose expenses. There is no management or manager appointed to look after the usage of proceeds received from the IPO. It will instead be looked into by the audit committee of the company. As far as the financials are concerned, if you look at the revenue, profit and total assets for the last 2 years, that is 22-23 and 23-24, we have revenue of 9.3 crores as against 19.35 for 23-24. In terms of profit, it is 1.19 crores against 4.69. So you can see that the profit after tax is increased almost 3 times or a little bit more than 3 times. The total assets for the same period was rupees 26.16 crores as against 54.03 crores. So the company has been growing in that sense. Along with the revenue, the total assets is also increased, the profit is also increased. Now we look at the EPS. For 22-23 it was 1.18, for 23-24 it was 4.56, and 24-25 it was 4.76. So if you use the regular weightage, the weighted average would be 4.10. This we are talking about the diluted EPS, as the company had come out with additional shares or issue of additional shares in the last year, that is 24-25. This can be compared against the high EPS of 20.90 of peer company and the lower EPS of 15.11 against by another peer company. So to that extent, this EPS is aggressively priced for this company as compared to the others in the same peer group. Now we look at the return on equity percentage and profit after tax percentage. For 22-23 it was 26.77%, followed by 54.01%, followed by 31.13%. So the return on equity is increased a little bit in 2024-25 as compared to 22-23. As far as profit after tax percentage is concerned, it is 13, followed by 24.37, followed by 19.11. So the profit after tax percentage is about 19.11. Now we look at the top 10 suppliers who supply materials to this company. It is basically 318.32 crores for 2023, 23-24 it is 510 crores, for 24-25 it is 560 crores, which constitutes 75%, 71% and 70%. So if you look at the top 10 suppliers, 70% is a little bit on the higher side. If they reduce it a little bit, maybe 10 to 15% more, it would be good from the future prospects of the company. Now, if you look at the take rate and the GTV, that is gross transaction value, for the said 3 years, it is 8.69 crores, followed by 18.64 crores, followed by 24.04 crores. The GTV for the same period is 426.53 crores, 719 crores, 805.87 crores. So the TR GTV ratio in terms of percentage would be 2%, followed by 2.59, followed by 2.98. To that extent, it's been steadily increasing. It needs to increase more to give comfort level to the investor. Now we'll look at the total bookings, the bookings per day, and the total customers. The bookings per total bookings for a year is, for 22-23 it is 60,829, followed by 1,09,451, followed by 1,62,975. So in terms of bookings per day, it is 167, followed by 300, followed by 447. So the total customers for the same period is 1023, followed by 1513, followed by 2956. So if you look at year 2 and year 3, the customer base has jumped by almost twice. So this is good from the perspective of the company in terms of growth. Now look at the various factors, that is risks and strengths of the company. The usual factors in terms of the government policies, government rules and regulations will affect the company positively or negatively depending on what the rules are framed by the government. Point number 2 is, because they are in the travel and tourism business, and the recent spate of accidents or mishaps of the airlines, there could be some stringent laws passed by the government which could create issues for the company in terms of maintaining the profit margin or profit or the bottom line. Now in terms of policies, again there could be policies which are issued by government or by the airport authority which could create bottlenecks for the company in terms of achieving the same volumes or achieving the same bottom line in terms of percentage terms. Regulatorily, they have been reporting to EPF and MCA, that is Minister of Corporate Affairs, ROC, etc. Now they will be reporting also to the stock exchange as well as SEBI, that is a regulator for the capital market. In terms of taxes and tariff, any changes in taxes and tariffs upwards or downwards in the country or in the foreign country to where the tours and travels are arranged would create issues in terms of maintaining the top line and the bottom line as far as the company is concerned. In terms of litigations, there are a few litigations which needs to be noted. These litigations are against the company, the directors of the company, the promoters in the promoter group of the company, as well as the KMPs of the company. So these are too few to really speak about, but however, if there any of these decisions go against the company, there could be outflow of money towards settling the issue. Another issue is about the non-compliances, which we'll come to next. In terms of non-compliances, the company has failed to spend the CSR money in the last 3 years of operations, which is last 4 years of operations, which is a cause for concern. The company is mentioned in the prospectus they will be they will be actively pursuing the exercise to reduce the gap in terms of spending the CSR money in the year in which it is accrued. The global economy is more or less same as far as this industry is concerned. The last 3 years, that is 3.3% to 3.2%, marginally lower to again to 3%, 3.3%. So which is similar to what it was 2 years back. The company claims that they require high amount of working capital to keep running the system. The global travel and tourism is largely dependent in terms of giving business to this company. So any issue like COVID or war or any such situations can create or hamper the sales of the company in terms of being able to push the tickets, get more customers. As we mentioned earlier, there are limited supplies which can create issue in terms of the company not being able to have adequate supplies to cater to the demand of their customers. In terms of insurance, the companies mentioned that at times the insurance may not be adequate. This is a serious concern because with the spate of safety issues faced by the airlines, there could be issues with respect to this company being embroiled in some issues due to which the insurance may have to be used. So if the insurance is not adequate, they may not be reimbursed completely. To that extent, there could be hit on the usage of money, and hence the bottom line may get affected. The take rate in GTV that we saw earlier has been increasing slowly, but however that needs to increase more in terms of growth prospects of the company. Technology is an important factor here because the feel good factor in terms of usage of technology has to be there with the customer for the customer to be a sticky customer. So this is something that the company needs to invest in continuously. Another issue is about the industry they are in. Because of this, there could be a lot of cyber security attacks and information security issues to the database managed by the company of the customers. So hence they should be up to date with respect to updates of technology. Non-compliances, as we saw earlier, the CSR is a non-compliance which the company said in the prospectus that they will be making good. Additional non-compliances are the forms related to Companies Act which needs to be filed with ROC, that is Register of Companies. The GST, there has been gaps couple of times. In the EPF, again in terms of filing, there has been gaps on four occasions. The company thereafter has ensured that there are no such gaps. The GST gap was in 2001 and followed by the EPF gaps. So as far as the last couple of years are concerned, the company has been clean as far as these non-compliances are concerned. The company is claiming that the historical records from the time they started operations for the first couple of years, that is 2003 onwards, is not readily available. So this could create issues in case of requirement of the old records. There is a serious conflict of interest seen in this company as the promoters themselves are running another company called Dex Air Private Limited. This company is into B2C, that is business to company types of sales. As against this, our company, that is IPO company, is into B2B, that is business to business kind of relationship. So the expansion of the company would logically be into B2B. B2C expansion might be lower in terms of the possibility, as there is another company of the same group which is into B2C type of transactions. Now the company also claims to have taken ISO 9001, which is quality management systems certification. We have summarized the RHP and placed it for you to peruse. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company. In light of the above, there is no reference to the correctness or otherwise of the price and offer, prevailing grey market price, possibility of listing day earnings, etc. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel. Thank you. Doubts, queries and suggestions, if any, may please be put to me at ramkbharosay@gmail.com.